You've probably heard terms like pre-seed, seed, post-seed, mango seed, avocado seed, Series A, blah, blah, blah. But in today's episode of Uncapped Notes, we're going to define what these fundraising rounds actually mean in the world of VC.
Yeah, Janelle, all this stuff is super weird and confusing, these terms in venture capital, but I'd like to actually frame it in the way that you did just now, which is let's focus on the early stages of venture financing, because that's where it gets the most murky and where we see a lot of founder confusion.
You know what I'm not confused about? When I try to get in touch with my millennial side, I like avocado toast. Can we talk about the avocado seed round?
Yeah, let's never do that episode of Uncapped Notes ever, but maybe we can begin by talking about usually the initial tranche of capital that many founders raise, which is called the pre-seed raise. Does that sound good to you?
Yes, we can do that.
All right, so let's talk about pre-seed rounds. A lot of times this is synonymous with things like angel rounds, friends and family rounds. Generally what we find is to being the norm at pre-seed is this is when a team has oftentimes just decided to go full-time or about to go full-time on their startup idea. They have a defined vision that they want to build out. And maybe they've even created something like an early prototype. Doesn't mean that there's any real users yet. And it's mostly a statement around the vision of what they want to create. So pre-seed raises are really interesting in that they often have a couple properties. One is that there's no data for the investors to really review. You are just betting on the team and betting on the vision. I think the second thing that's kind of common when it comes to many pre-seed raises is that they're typically pretty small. Now, some founders have been able to go out and raise tens of millions of dollars on just an idea, but the norm is maybe a couple $100,000 are being put together here. This might even be done in a party round, which, Janelle, I think we should talk about in a future episode of Uncapped Notes, where it can include folks like your parents, if you have parents that have any money, or family members or friends, or even your dentist. It could be a whole number of people who are trying to support you to just get off the ground and support that vision. So that's what pre-seed is.
Founders, if you're finding this helpful, we would appreciate your help in getting this episode out to more founders. How can you help? Please subscribe to our channel and be sure to like this episode. But let's get back to it. Eric, can you explain what happens after the pre-seed? So now we're talking seed and post-seed.
Yeah. So what I often see with the companies that we're supporting, and by the way, Hustle Fund, we like to start supporting founders right at the pre-seed stages alongside of family members and friends and so forth. Right after that idea has been identified, you're beginning to execute. Now, at the seed stages, this is where you tend to find a lot more money being raised. So you've been able to ship your early prototype and product, maybe make a few iterations, and possibly you're now putting this in front of actual users who are providing you actual feedback. Examples of this could be, we're creating some sort of new consumer social networking app, right? And maybe we put it out there and we're seeing thousands or tens of thousands of people who are starting to sign up and try it out. It could also be things like, well, me and Janelle have decided to create an enterprise SaaS company. Perhaps we have one or two initial pilots with some really cool companies who are starting to actually pay us or at least go into a pilot phase, which could lead to money a little bit later. You're going down this journey of starting to demonstrate to prospective investors that you're on your way to product market fit. And I see raises between $500,000 to $3 million often at this stage. So it's a pretty substantial jump up from the pre-seed stage. And following that is what I often call, and what is often referred to in our industry as the post-seed raise. Now, this is where we can get weird sorts of fruits here too. I've seen this called mango seed. I have actually seen, Janelle, someone called us an avocado seed, which made me almost instantly say no to the business because I thought that was too much, but I didn't. And but this post-seed raise is, okay, at this point, we're making some milestones that are past this initial seed phase where we're getting these initial pilots and so forth. There may be more users, using our application. There might be a lot more pilots in play, or even many more iterations of the business to support with evidence and data. It could be data through revenue, usage, monthly active users, what have you, that you're definitely much more firmly on that path towards product market fit, but not quite ready for your Series A. where, around their Series A, perhaps like the threshold there is to be making $1 or $2 or more millions of dollars in revenue, very, very strong kind of analytical evidence behind you, a team that's sort of formed. At the post-seed stage, this is kind of like the awkward teenage phase that we all gone through, right? Like, yes, we have developed and we kind of look like an adult, but we still got that acne, our limbs are weird proportions, and we're still a bit awkward with our cracking voices. We're not quite ready yet to be the young adults, which I guess in this metaphor is like the Series A. You can hear post-seed often referred to as also an extension round. Extensions are also another topic we may want to talk about at some point in a different episode too, but it's just that phase between seed and Series A where you can use a little bit more money to just prove out a few more metrics and milestones for the business before you can truly make the case that you've hit product market fit. These post-seed raises can be substantial. They could be often between $1 million, $5 million. I've seen even a little bit more than that. It's something to give you a little bit more runway to prove out some of these metrics.
Okay, to wrap up this discussion about fundraising rounds in these early stages, Eric, can you give us a little more insight into what happens in a Series A round?
Yeah. So the Series A round, it tends to be much more substantial in size. Times are sort of changing, so sometimes these numbers are in flux. But historically, in the past few years, this is a really major raise. Expect between like $8 million to $15 million at times at fairly high valuations. At this point, you've proven out that not only is there clear evidence that you're well on your way, if not already at product market fit, that to me is defined that there is a clear demonstrable need that you've proven that a market exists to buy your product or use your product. It's substantial and you're on your way to capturing up a decent share of it as well, and could use a lot of capital to actually expand your team. But also on that team front, by that Series A, that you've shown that you have capacity and capability to recruit really great people to form a real organization to build out this machine that's ultimately going to be your business that creates massive enterprise value. So you're not raising small chunks of cash usually for your Series A. Normally it's much more substantial. And at that time too, a lot of other things are happening too. With the seed stages that we had discussed, Chanel, a lot of times, which is the norm, these are done through instruments like safes or convertible notes. These are very chill kind of IOUs that say like, yeah, like, I'm taking your money now and eventually I'll give you some shares. In a typical Series A, normally there is a lead, a venture capitalist who's putting half or more of the money into the round. They want to issue shares for themselves to demonstrate ownership of what they own, as well as your employees and other investors. And in addition to that too, that's typically when a board will form, where you're expected on a quarterly basis to report to your board as a founder about the progress. They're supposed to be your consigliaries, these board members, and helping you to progress your business so that it can scale into massive ways. And at that point, I think the rounds are a little bit easier to describe. You have your Series A, and then comes the B, the C, the D, all that kind of stuff. Sometimes there's a little bit of money injected in between, but these are very well-defined rounds at that point.
Well, founders, you now have a really good view into the future about what it will look like to go through all of the early stage rounds in fundraising. And you have a good idea of what not to name your post-seed round so that you can avoid annoying Eric. Be sure to leave some questions for us in the comments or just comment, and like and subscribe to Uncapped Notes.